Nichols, President, Co-founder, Standard Real Estate Investments. The three things that are affecting multifamily are housing affordability from a resident standpoint, the cost of housing from a product itself standpoint, and then financing, capital markets. We like to see policy where cities and towns work with developers and operators around real estate taxes. I think that's the most straightforward and effective way to reduce operating expenses and then increase values without having to increase rents, making deals on investments pencil. There's two components to that. There's the cost of actually retrofitting these buildings. I mean, they weren't built as homes, they're built as office buildings, and oftentimes they're 20, 30, 40, 80 years old. And then the floor plates is the largest component. From a light standpoint, a lot of this just does not work, getting light to different places in an apartment building. So if you have an office building with 40,000 foot floor plates, just the windows are on the outside and the stairs might be in the center. You might not be able to get light to all of the space that you need to have residential units that aren't extremely narrow and extremely skinny, so all of them can have a window on the outside of the building. There's a lot of dead space in the core of the building that might not fit. So it's only a very small subset of those office assets that could actually be converted to apartments. There's a cost issue from a retrofitting standpoint, and then there's saw cutting of concrete and those kinds of things, but you can do that for a cost. The light issue and the floor plate, you cannot change. Like, that's the one piece, even with dollars, you can't change the physical dimensions of the building. In the short term, it's the other side of the coin that folks are dealing with now. It's liquidity. Folks who were buying assets 2, 3, 4 years ago with financing that doesn't really make sense anymore. They're looking for liquidity and selling otherwise perfectly decent assets. It's an opportunity for those today to buy them. And then in the long term, I think all multifamily works over the long term. I mean, in the short term, you can see what's happening to you and you can underwrite interest rates. In the long term, people need to live somewhere, and there is history and a need for housing over the long term, but it's the medium term that is very fuzzy. You don't know what's happening with rates or supply. It is. I mean, climate change is something that you consider across all of our investments. It's really more what you do to the property and how you operate it, more so than if you make an investment or not. It's not guiding our strategy, but for us it's a defensive mechanism to make sure we can operate the property in a way that's carbon efficient, because from an environmental standpoint, it's the right thing to do, but also from a risk standpoint, we believe in the very near future, if not already, assets that are not able to operate in a carbon efficient way are just worth less in the free market. I think the location of assets, I mean, technology is changing rapidly, and folks are able to live in different places because of remote work, and they need different things, which requires new buildings. You mentioned retrofitting office buildings, but even older apartment buildings. I tend to think that the actual technological innovations don't impact our investment strategy as much as they impact tactically how we execute on investments. It's almost like a table stakes consideration, just like environmental sustainability. It might not lead our strategy, but it becomes in the marketplace something you have to do to be competitive. And then what you invest in and how you invest is driven by other things. The last 3 years is a really interesting time frame for us at Standard. We started our firm in September of 2020. Prior to, most of my team was running a fund at a much larger investment management company, CBRE Investment Management. And for us, it's been opportunity. It's been difficult to raise capital in this time, but we found a way to get that done. And now that we are investing in the current themes, we don't have to deal with legacy assets. So this last 3 years in turmoil has presented for us as opportunity to make the right bets and find the right assets that make sense for the next 10, 20 years.